compilation engagement is used for. Why would you do a compilation engagement? Now, the standard says the following to us. A compilation engagement will be used if the expertise of the practitioner is required to compile financial statements, but very importantly, the users do not require any assurance on the financial statements. That is the crux of it, because this is not an assurance engagement. Because financial reporting requires judgment, management may benefit from the assistance of a practitioner when making significant judgments. And we'll also be discussing this, where the practitioner is in a position where support and assistance may be provided to management. Secondly, if management requires reporting on the compiled financial statements for internal purposes, the emphasis is on internal use, and there are no external users, such as lenders, insurers, or customers. And the reason why this is so important is because that would direct us to a different type of engagement, an assurance engagement, and not just a compilation engagement. So that's very important. Who would be the users of the financial statements? Thirdly, if the purpose of the financial statement is for use within other engagements, such as financial planning, or tax reporting, again, users not placing reliance or assurance on the financial statements. Number 4, for transaction purposes, for example, financial statements are needed to support a transaction involving changes to an entity's ownership or finance structure. And then lastly, to compile interim financial statements that is subject to a review or an audit engagement. Now, this is our starting point. If you need to prepare financial statements and it falls within this scope, then a compilation engagement might be the most realistic and relevant option for you to make use of. There are other engagements that one could also pursue, and Anton will talk us through that later on in the presentation.
And moving on to the compilation engagement objectives here, the practitioner merely has 2 objectives that he or she wishes to achieve with a compilation engagement, as you can see on slide number 3. And this is obviously in terms of ISRS 4410. Firstly, and that will be to apply his or her accounting and financial expertise. And I put this in red because it's so important, to assist management. You can see here, not to prepare the financial statements on his or her own, but to assist management in doing so. So to assist management in the preparation and presentation of financial information, in accordance, obviously, with an applicable accounting framework based on information, again, provided by management. So this first bullet very much indicates to us that management ultimately retains responsibility for the financial information that is compiled with the assistance of the practitioner. All right, so that's the first objective. And then secondly, obviously, is to report appropriately in terms of the requirements of ISRS 4410. So those are the 2 main objectives of a compilation engagement.
Now, taking into account what the scope is and the objectives are, what is then the role of management and those charged with governance? Firstly, they need to take responsibility to prepare and present the financial statements. Secondly, they need to select and apply an appropriate accounting policy to the different transactions. Thirdly, they need to develop reasonable accounting estimates where relevant, and that could relate to provisions, it could relate to depreciation, amortization, allowance for doubtful debt, etc., etc. And then lastly, they need to decide on the applicable financial reporting framework. Now, this is management's responsibility. However, the practitioner may assist management with the significant judgments required during the course of a compilation engagement. But it is very important that it's clearly stated, communicated, and reported that these aspects form part of management's responsibility, and that's not the responsibility of the practitioner. The practitioner is merely there to assist management where needed.
When we start doing compilations as compilation practitioners, we also have the responsibility to manage the expectations, but not only of the client, also those that are using the financial statements, all right? For example, the tax authority, etc. So it's all about association. We compile the financial statements, and therefore our involvement could easily be misunderstood by any of the users that actually, use the financial statements that have been prepared in terms of the compilation engagement. So two aspects, therefore, stand out. And these are obviously highlighted by the fact that we need to manage these expectations because of our association with the preparation of the financial statements. Firstly, we have to be over-focused on our ethical behavior. All right. So we have to, obviously, these are the ones that stand out, but we have to act with integrity, all right, in all aspects. We have to remain objective. Right? We have to be professionally competent. And unfortunately, I can give you an example here of where people in the past, professionals, have accepted compilation engagements. And then they contacted, me and other people. And then they say, I've accepted this engagement, but I don't really have the necessary IFRS skills, for example, or IFRS for SME knowledge to do the engagement. Now, that means that this engagement is already flawed right at the start, because the ethical requirement of professional competence and due care, those requirements have already been violated, all right? So we need to make sure that we are professionally competent, that we apply due care when preparing these financial statements for management, for which they take responsibility ultimately. And then obviously maintaining the confidentiality of the information. I don't think anyone, will have a problem with that. And professional behavior overall throughout the whole compilation engagement. And obviously, we need to take into account things like codes of conduct, etc. We'll talk about that in a short while. The second aspect that stands out that has to be managed carefully is obviously that management must remain ultimately responsible for the preparation and presentation of financial statements, as you pointed out earlier, in accordance, obviously, with an appropriate or applicable financial reporting framework, which we'll also talk about in a short while. All right, so I think if we move on in this process, there are four very distinct phases in a compilation engagement. The first one focuses on whether the engagement should be accepted. And under that also follows or falls, the continuance of a former engagement, like last year's compilation engagement that is now being done like a recurring engagement this year. Then the second main phase will be the planning phase of the compilation engagement, after which we perform our procedures in phase number 3, and then our final phase of the engagement is then to appropriately report on the engagement using the correct wording and establishing all of the principles in our report that we want to bring to the attention to of anyone that is potentially going to use that report. So these are the 4 phases that we're now going to discuss with you individually, just to make sure that we all understand what the important principles are that underlie each of these important phases. Right, so I'm going to start off with phase number 1, and that will be the phase focusing on accepting the engagement. Right, so 3 main areas, as you can see on the slide, will have to be considered. Firstly, is the firm ready? The second main concern, can the engagement be accepted or continued? And lastly, how do we agree the terms of the engagement? And I want to emphasize that final bullet, agree the terms of engagement. That is absolutely essential because there are some minimum requirements that have to be dealt with in terms of agreeing the terms of engagement. Right. So if we start off with, is the firm ready? Understanding ISRS 4410 revised is important. So the first thing that is important is that the practitioner must understand the entire text of 4410. That's a requirement. Okay. And the practitioner must also comply with every requirement in 4410 without exception, unless it is not applicable to the particular engagement. And then lastly, the practitioner must also not represent compliance if there isn't full compliance with 4410. That's the first aspect that's important, is that understanding. The ethical requirements we have actually spoken about before, a few minutes ago, so I don't think it's necessary to highlight. So yeah, with this, we've discussed this one here, which engagement is most suited. We've discussed this acceptance or continuance checklist, and this is a very, very detailed and good way of going through this process of acceptance and signing it off, having it reviewed by the senior partner, and only then are we now ready to commence with phase 2.
What a big process it is to get to this point, and we're still not ready to jump in and do the work. Now the planning needs to happen. Now, it's important to note that planning involves ongoing communication, and this is in particular with those charged with governance. Now, the question is, who would be the parties charged with governance? And it depends. That is why it's so important to have discussions with the client to understand the client's structure and to determine who would be those charged with governance. Now, so this is what planning involves in a compilation engagement. So it's important that there's a plan of action for compiling financial statements that are not incomplete, inaccurate, or otherwise unsatisfactory. That's what you're trying to avoid. And if you plan properly, you'd probably reach your goal, and chances are you'd have financial statements that are complete, accurate, and satisfactory. So this is the planning stage in a nutshell of compilation engagements.
Karen, thank you. I think that's quite interesting. The planning phase, so important, and the impact that it has on phase 3, which we're kicking off with now. Here we're now actually going to perform the procedures that you've been speaking about now in the planning phase. All right. Now, kicking off with the procedures themselves, what is important here is that the ultimate consideration in respect of the procedures that you need to perform is to ensure that you pervasively are not associated with information that is false or misleading. Now, that guides the procedures that you have to perform in a compilation engagement. The last phase is for Karen to just talk about reporting.
Yes, thank you, Anton. So after concluding all the procedures that need to be performed, you actually need to prepare a compilation engagement report that goes hand in hand with the actual financial statements. Now, this is to communicate the nature of the engagement and also to again highlight the roles and responsibilities of the practitioner. And I'll show you an example of that just now. It could also be that the financial statements were not prepared based on a general reporting framework, such as IFRS or IFRS for SMEs, but on a special purpose framework. Now, if that is the case, ladies and gentlemen, there's a paragraph, an explanatory paragraph necessary to explain the purpose of the financial statements and the intended users of the financial statements, and to also caution that it cannot be used for a different purpose. You might also find that you'd have some sort of clause in that report to just restrict the use or distribution of those reports because it's very limited in its scope and its use. The wording of the report we'll look at just now, but it needs to be dated, it needs to be signed off, and it needs to clearly indicate that management takes responsibility for the financial statement preparation and compilation, but you as the practitioner assisted management with that process. So let's look at an example of the report. This is coming from the IFAC guide. Firstly, it would be addressed to management or those charged with governance, because you were basically instructed to do this engagement by those people. So you'd say that you've compiled the financial statements based on information provided by the client. Very importantly, focusing the attention on the fact that you compiled based on information provided to you. So if there's an error or a problem, you did not initiate the information. It came from somewhere else, and that would therefore be the party that takes responsibility for the accuracy of the information, namely the client itself. So you basically provide some information related to the statements that you've prepared. So that would be statement of financial position, statement of comprehensive income, statement of changes in equity, etc., for this specific client for this specific period. So that would be the intro paragraph, just basically explaining the scope. Then you'd specifically state that you've performed the compilation engagement in accordance with the ISRS 4410 revised. So that would be the framework that you've applied. Thirdly, you would need to state that you've assisted management with the preparation of the financial statements and that it was prepared in terms of either IFRS or IFRS for SMEs, if it's a general purpose financial statements. You'd also then specifically state, Anton, and we've spoken about the ethical requirements. You'd specifically mention this in your report to state that you've complied with relevant ethical requirements, including integrity, objectivity, professional competence, and due care. We've spoken about this, so you need to specifically state that you were bound by these principles and that you've applied it in performing the compilation. Then probably the most important part of the whole report. These financial statements and the accuracy and completeness of the information used to compile them are your responsibility. So it's not the responsibility of the practitioner. So now you've clearly stated what are the roles and responsibilities of management, or those charged with governance, and that of the practitioner, so that there is no uncertainty about that.